I'm Jeff Lazerson. I'm the president of Mortgage Grader in Laguna Niguel, California. I've been a mortgage broker for 30 years. I've funded well over $1 billion in loans, so I know a lot about the business. I write a column in the Orange County Register newspaper every Sunday, and I've been writing that column for about the last 6 years. I'm a commentator, or I'm an expert for KNX 1070 radio, so I have a lot of knowledge and background, and I am here today to help my friends at Act 2 to talk about reverse mortgages. So the first thing we want to talk about is the population and the age of people that are going to need this type of housing. So according to a Harvard study, over the next 20 years, we're going to go from 48 million to 79 million people that are age 65 or older in the U.S. Out of that group, right now, it's about 25% are head of household. And in that timeline, you're going to see 1/3 of those people, 65 or older, are going to be head of household within that 20 years. So the population is growing, aging, and the home ownership rate, of course, is much higher with people that are age 65 or older. Out of that group, they also cite statistics from it's called Demand Institute, that 42% of respondents age 50 to 69 that plan on going to a smaller home, that's 42%, and 32% plan to upsize. So there's going to be a lot of movement over that time period as well. So let's talk about home financing for people that are 65 and older, seniors. Most people hopefully own their house free and clear, and they don't have to worry about a mortgage at all. That's the most ideal thing that anybody could hope for or want. But in reality, that's not where the world really is. So there's a lot of financing options for anybody that's getting up there in age and needs a home loan. There's a loan out there called a parent loan, where if the parent cannot qualify for a loan on their own, a child can apply for the loan for the parent and get the loan. It's in the child's name, but you get great owner-occupied pricing. It's a regular mortgage, and that child can put you into a property and get good financing. Now, most people that are getting up there in age do something called a reverse mortgage when they need financing, because they simply don't have the financial wherewithal to be able to make the house payment every month. So reverse mortgage, there's some basic rules about the reverse mortgage. First rule is that you have to be at least 62 years of age, and there's an actuary table sliding scale based on the amount of down payment needed. But on the low end of it, you have to put at least 47.6% down, so down payment or equity in the case of a refinance. And on the high end, if you're 90 years or older, purchase or refinance, you only need 25% equity or 25% down payment. So this table works based on age and quite frankly, how long they expect that you're going to live. So the beauty of the reverse mortgage is there's no payments. You get the loan. You don't have to make any payments ever on the house. You do have to continue to make property taxes, payments, fire insurance, homeowner association payments. You have to maintain the property, so you still have responsibilities on that property. You have to live in the property. Once you move out, or God forbid, when you pass, your heirs have 12 months to sell that property or pay off the loan, one or the other. Another beautiful thing about the reverse mortgage is that no matter how long you live there, let's say that you outlive the actuary tables, and let's say, for example, that the property is worth $100,000 for simple math, and you actually owe $150,000 on the reverse mortgage loan because of this accrued interest. The way the law works is that your heirs or your estate only has to pay back 95% of the value of the property. The idea behind that is there's enough room to be able to sell the property and not be burdened financially when you either pass, or if you just sell the property if you're incapacitated in in a home or something like that. The downside of the reverse mortgage is it's the loan of last resort, and the reason for it is you have this negative amortization accruing every month. It's very expensive negative amortization too. So if there's any other way to get a property, that's what you should be doing. You should not do a reverse mortgage. Always the loan of last resort. But if you're faced with a situation of, look, this is the one way I can own a property or keep a property versus not having any property, then there's nothing wrong with getting a reverse mortgage. Another issue with the, cons of reverse mortgage. There's a credit underwriting decision that has to be made. That started in 2015. They started requiring credit underwriting to some degree. They'll check to make sure that you have enough residual income to cover the property taxes, utilities, things like that. Those are some of the basic pros and cons of the reverse mortgage. If you need more information, you can Google it on the internet. You're welcome to contact me at mortgagegrader.com or Jeff Lazerson at Mortgage Grader. Or phone number 800-909-2668. But there's a lot of information out there, and the best thing about the reverse mortgage is it's mandatory counseling before you ever get a reverse mortgage loan. Independent of any salesperson, you have this mandatory counseling with a HUD-approved counselor to make sure that you know it's right for you.